Welcome back to the News at 9. It's time for Money Management Monday with Dow Chemical Employees Credit Union. I'm here with Allison Lutrin, accounting specialist. Thank you so much for being with us today.
Yes, thank you.
We appreciate it. So today we're talking about some things you should know about credit cards. So why might it be a good idea to have at least one credit card?
So credit cards are going to help you build a payment history if you're using that credit card, which in the long run is going to help boost your credit report and your score. So as long as you're making those minimum payments and you're making them on time, that's going to help over time boost those things on your credit report. It's also good to have in case of emergency. You may not be able to get to an ATM or, get the funds that you need in case of an emergency. So a credit card is good to have at least one.
So what are some things to consider when choosing a credit card to apply for?
So you always want to look at the interest rate or the APR, the annual percentage rate, because you want to know how much you're going to pay if you can't pay that credit card off. So that's always really important. You want to look at annual fees as well. You want to know if you're going to pay something to have that credit card. If you're not using it especially, you don't want to pay that fee. Things like fraud liability. If you have fraud in your card, are you liable for it? You want to make sure you know that. If you are an international traveler, you want to make sure that you look at those international travel rates, what they're going to do to your card, if they're going to charge you extra or if it's even going to work international.
So when a credit card advertises an introductory rate, like 0% interest for 12 months, what happens after that ends?
So they should disclose to you what rate you're going to have after the 12-month introductory period. The one thing that you want to make sure that they're not going to do is backdate your interest for you. So if you do that introductory rate and say you do a balance transfer on it, so you move, $5,000 from another card over to use that, if you don't pay off that $5,000 in the 12 months, it's possible they'll backdate that interest for you. So instead of paying, say you paid $4,000 of your $5,000 by the end of the month and of the 12 months and you only have $1,000 left, instead of only charging you interest on the $1,000, they're going to go back and charge you interest on the $5,000. That rate might be a lot bigger than you think it's going to be, like in the 25, even 30% range. So you want to make sure that when you're looking at that introductory rate, you read the fine print of what's going to happen afterwards.
Well, speaking of fine print, tell us some more of the fine print items to pay attention to when choosing a credit card. Things like annual fees, potential penalties for making a late payment, that kind of thing.
Yeah, you want to make sure that you're looking at all of those things. So you want to know what your annual fee is, if any, what your late payment rate's going to be. Even things, if you go over or under your credit limit. So if you take your card negative, if you overpay it, they might charge you. If you swipe your card too much and it's over your credit limit, they might charge you some more. So you want to make sure that you're looking at all of those different penalties or payments, late payments or anything like that they'll charge you.
Getting charged for paying too much. Interesting.
Yes.
Well, if a credit card offers you the option to purchase insurance that lets you request to temporarily suspend or reduce your payments if something is catastrophically that happens to you, is that something worth considering?
That is going to depend on personal preference. Everyone has kind of their own different backup plans. So if you have maybe some sort of insurance through work, maybe like short-term disability, something like that, it might be more expensive for you to have the insurance on your card. But if you don't have any backup like that, then it might be something to look into. It kind of just depends on how much debt you have, if you have the ability to pay it off if something happens. So that's really going to be more of a personal preference.
All right, lots of things to consider. Thank you so much for helping us navigate that today.
Thanks.
We appreciate you being here. And if you would like more information on today's segment, check out the hot links section on WNEM.com.